Hey guys, yeah, great to have Chris Vermeulen back with us from the Technical Traders to talk a little bit about commodities today. We're going to cover gold, we're going to cover some oil charts as well. Obviously, oil, the big mover today, so it'll be great to get Chris's opinion on this big move down as we get this kind of crossover between contracts and huge spread between the two that's still, even to this minute, very prevalent. So great to have you back on the show with us today. Chris, let's jump right into things here. Let's talk first about gold. It's been an interesting move, to say the least, kind of back to the upside. Really not a lot behind it in the way of, velocity or volume, but it's kind of been a slow grind for gold. What are your thoughts on it?
Yeah, well, gold's been really the major safe haven, and it's rallied all the way up to our 100% measured move, which is around that 1,700 and change area, and it's broken through that. And so I think gold's going to hold up really well here. This is the time when gold miners should start to shine. And I don't know if you have any charts there, but there's some really interesting price patterns unfolding between what gold has done and what the gold miners, the large caps, are going to do. So yeah, there's a good chart of the GDX large cap gold miners, and they've been building this base for years. And really the distance, the height of the base is usually the good first major target for the upside potential. And they're testing this area. The daily chart looks phenomenal on the gold miners right now. GDX trading right under that blue resistance line, ready to pop and run. I think it's going to take the lead, outperform equities. So I really like it. There's a gold chart there showing what happens with leaders when they actually form this pattern. And gold has already popped and ran to that level.
Yeah, as we see that, kind of slow move up in the price for bullion as well, getting a nice response from the actual miners. It's been interesting though, Chris, and I'd love to get your opinion on this. Over this, extremely volatile period that we've had in equities, as you said, gold typically a safe haven. We've seen a bit of a disconnect this time as far as, the rush to gold. Anytime you see a big move down in the market in the past, kind of get a rush over to gold. That really hasn't been, the case this time.
Yeah, I think the big rush to gold, most of the energy was used up last year when it broke out of its base and had that run all the way up to that resistance level. I think that got most of the money into gold, and it hit a major resistance right when the virus hit. And there was so much panic selling in the equities market, it really forced liquidated margin calls on a lot of positions. And I think that's what really crashed gold and silver and gold miners as well. So I think it's struggling. It's used a lot of its energy. To me, the fresh money, the big opportunity is actually in the gold miners. I think gold's going to chop around. I think it's got a huge overhead resistance from 2011, 2012 top. The easy move here going forward is if GDXJ, the large caps, break out. That's when the big funds are going to start rolling in. That's when advisors are going to tell their clients, hey, gold miners are on the move, get in. So, the train is at the station for large cap gold stocks. And once it starts to leave, I think it's going to be a flurry. And that's going to be the hot sector over the next few weeks and couple months, I think.
So we obviously have the GDX and then the GDXJ, which covers more of the junior side of things. Why is it that you like the large caps?
I like the large caps simply because they are about to break into a full-out technical bull market. The juniors should perform percentage-wise really well, but big money will rotate into the bull market. I mean, when you look at the breakout on the gold chart, when it breaks, when something starts a new bull market, it runs and rips to the upside for months. Something's still in a basing formation like the juniors, they get chopped around. They're a little more unpredictable. You want something that's in a clear pattern and the herd mentality is piling in and, funds are moving in. That's where I like to go. I mean, there's a great percentage per opportunity in the juniors, but really the easy, steady money, because I'm looking for consistent stability, is in the large caps.
And the reason I kind of specifically go to that, side is because, of the individual names involved in the bigger one versus the ones in the smaller one. Obviously, the easy way to do it, look at an ETF like GDX or GDXJ. It covers the entire group. You don't have to kind of pick and choose. But if you had to kind of, dig down to the individual names, is there one or two that you like that might be good on the long side as well?
I don't really dig into the juniors too much or even the gold stocks. I mean, I think the better plays, without naming really any, because I don't follow them too closely, but the ones that get royalties and have a basket of multiple companies that they get royalties from, those ones have always seemed to perform the best. and are really the most diversified of the gold miners. So they get a piece of the pie, and as the pie becomes more valuable, I mean, it really can take off. And not only that, but the shares that those companies hold as part of their asset really take off too. So not so much the individual little companies, but I like the ones that kind of conglomerate everything and get royalties on multiple mines.
Great stuff. Let's shift gears here a little bit, Chris. We'll jump over to the oil market. Obviously, the big topic of the day. I mean, we come in this morning and, the May contract has an 11 handle in front of it versus 22 on the June contract. What are your thoughts overall, first off, on oil itself and then some of the individual names?
Yeah, I think oil is putting in a significant low here. The last time I was on the show, I pulled up a chart and I showed you the downside is 17-14 range. And then the analysis last week, I reposted. It looked like it was 11 in the $12 range for a breakdown. And Friday, crude started to break down. Today, we've hit both of those targets. We've actually blown right past them. So we're getting into a capitulation, I think, a washout low in crude where there's just absolutely no demand. No one wants to hold or buy oil. And so the bottom's falling out. Volume really, I mean, it doesn't seem too big today. The continuous contracts don't really show the full volume, but overall, the energy stock sector is starting to show signs, which the last time we talked, it's looking promising that the big money's seeing a bottom in crude here, and there's really going to be only upside potential, but it still may struggle down here for quite some time.
Yeah, let's jump into some of the individual stocks now as far as the energy group is concerned. You mentioned XLE as far as the ETF that you like to watch to kind of cover this group, down significantly today, obviously, with the price for crude. Talk to us about XLE.
I like XLE. I mean, it's kind of a leading indicator for crude oil. Typically, you'll see the energy sector stocks lead the price of the underlying commodity. And that's what we've been seeing. You look at crude oil, it's been trading sideways for a month, and now it broke down, where the energy stocks have actually been trading higher with a series of nice bull flags on the daily chart. So it still looks primed and ready. I mean, they haven't broken out yet. They've got that red resistance line to clear. And once they break that, we should see expansion. We should see money pile in. And I think when that starts to break out, I think that'll be when crude oil is bottoming. And crude could still be trading at this price or even lower at that point. I think money's starting to rotate into these energy stocks, knowing that once everyone feels that crude has bottomed, everyone else is going to pile into this sector. So I think we're starting to see that money. You can see that big green bar from Friday. Oil was down 8%. Energy stocks were up 8%. So there's definitely a disconnect, and that's always a red flag for an opportunity.
We mentioned briefly before we came on, you like to look at a little bit of a higher time frame. When it comes to both the gold sector, as we covered, and now oil as well, what kind of a time frame would you look at as a potential trade in either of these groups?
Well, the patterns I'm looking at there are on the daily chart, but I actually follow the 30-minute chart for pretty much all the trading I do. It really gives you a nice view. You can zoom out several weeks on the chart. You can go up months even and squish the chart in, but you get to still see big patterns along with smaller patterns. It allows you to really do a lot of analysis and get a feel for how big the next push is going to be, or the next pullback, or how long a pause is going to be, right down to within a few time frames of an hour or so for certain patterns, or is it going to take 2 or 3 days? I like the swing trade in the market moves that really take place over a 1 to 7 day period. I find those are really accurate, and it gives you some action in the market. But those crude oil trade, and I think like the gold miners trade, I think they're going to run and last for several weeks once those start to break out.
A nice recovery overall in equities today. Just real quick before we let you go here, Chris, we'll get your thoughts on the overall market. Obviously, a decent recovery off the lows that we saw when we came in this morning. What do you think happens here for the rest of the week?
I'm hoping they're going to continue to go higher. I mean, we got long this rally. We've been trimming off on the gains on Friday, and I've been watching your show, so I got hooked back into doing some day trading in the morning, and I just love it. And Friday's short squeeze was unbelievable. I had a couple friends. We were doing a live screen share and trading, and I mean the moves on Friday in the afternoon for futures or the SP 500 were just incredible. I think we're going to go higher. I think there's 3% to the upside still left in the SP 500. If we can break above about a 3% gain, the next level will be about 10% from where we are. So I still like it. There's still lots of upside, but I think it's going to become a rougher ride, and I think other assets could start to pick up the slack. like the precious metal miner stocks if they can break out.
Great information as always. We won't keep you, Chris. Always a pleasure to have you on the show. Stay well, and we'll speak to you again soon.
Yeah, thanks for having me, Brandon.
There you go, guys. Chris Vermeulen from the Technical Traders. Head over and check out their website. He's all over Twitter as well. So great follow if you're looking for one on the technical side. A little bit of a higher time frame, but it's always good to have a look at asset classes. He talked a lot about some ETFs there and key levels for both gold, the gold miners, and oil. So great stuff as always from Chris. Let's go back to the guys.